Good afternoon, everybody. Will Lair here with Perpetual Assets, back with another educational series for you guys. Today, we're very excited to bring a special guest on the line who literally needs absolutely no introduction in the silver community. The silver guru himself, Mr. David Morgan. David, how are you, sir?
Well, I'm well, thank you.
Thank you for joining us here today. I'll start out here with a handful of questions for you. David, about, 2-3 weeks ago, you and I were on the phone, and this was actually before the metals started to break out, and you mentioned that you felt like we had put in a bottom. It looks like your timing was spot on. What brought you to that conclusion, and what do you see as points of resistance moving forward?
Okay, well, first of all, going to June 28th, there was what's called a key reversal in the silver market, and this is where it drops to a new low, and there's all kinds of buying that pushes the price much higher, and it closes at a higher level than the previous day, and that's called a key reversal. That took place, and they're called key reversals for a reason. So I noted that, but yet I wanted to see the market show me, more trading activity, which it did. So basically, I called the bottom, and yes, perhaps that could be determined in the future to be inaccurate. I doubt it. But the point being is I very seldom try to tell the market anything. I'm too old and experienced to say the market is going to this. The market knows more than anyone, and that's how I trade. And, of course, I invest and trade. I don't want to give anyone the impression that we're just trading here. We do both. But after that 1830 low, for the month of July and August, silver built a base. And once it broke through that base, which is about the time we were talking on the phone, I thought it would be significant and we get a pretty good move up. As far as resistance goes, there is some resistance. I do this kind of stuff on my members-only portion of the website. It's called Basic Plus. The Basic is the newsletter, plus the ability to look over my shoulder and see what I'm doing if I have a trade on. Or even if not, we do a lot of videos. I do updates on like the bond market, the stock market, the U.S. dollar, and a lot of things. But every now and then I do put on a trade, and if I do, I let people know where I got in and why and what I'm doing about it. So in that case, yes, I'm long silver. Base is about 2050, and there is resistance up through about the 24 level. It may be all we're going to see for the time being. I don't want to get anyone into the trader mentality. Most people don't belong in trading at all, but it's nice to see us off the bottom. It's nice to see this kind of surge. It's nice to see gold doing the same thing. And again, I'm pretty certain that this intermediate term low that we've seen for silver working lower for over 2 years is behind us. So thank goodness for that.
Yeah, it was a pretty brutal and extreme decline in the prices that we saw there. I don't think anybody expected, at least anybody on our side of the spectrum, expected that big of a decline. What this regards sort of exit strategy, if you will, do you plan personally on holding silver forever, passing it on to your kids type of thing, or do you think there will come a time when we should sell or trade silver for other relatively undervalued assets, be it gold, other metals, real estate, what have you?
Well, again, I'll let the market determine that. I don't know the future, but if silver in terms of purchasing power gets overvalued, certainly I would take a look at that. I mean, I'd much rather pass on, let's say, several acres of land on to my kids than silver that might not come back down to fair valued rather than extremely overvalued. So depending on what happens to silver in real terms, I'll use the gold analogy. I've probably used it too often, but I think everyone can relate to it. Everyone's heard ad nauseum that an ounce of gold buys a fine men's suit, umbrella, shoes, handkerchief, etc., from Roman times till present day. And so with that in mind, that constant value of gold, which does vary. Gold does vary in value. If gold were to buy a men's clothing store, then I would suggest for everyone that would show that gold is overvalued. It's not buying one suit, it's buying 100 suits, for an example. I'm just giving the idea. So that's the same thing with silver. If silver is overvalued in real terms, then certainly you would want to, in my view anyway, and ask me personally what I do, I would definitely look at something, and especially if it were undervalued. For example, if real estate happened to be undervalued, at the same time silver is overvalued, that would be a great purchase to make. So certainly I don't rule it out. I'm not married to silver for forever. I think it's definitely a place that has been good to us, although it's been a very rough ride for the last couple of years. Nonetheless, I think that there's a lot of upside potential left, but there will be a day probably when you would want to sell part, all depends on the person.
Mm-hmm. David, there's talk of your silver debit card that you've been working on. It's definitely something that we're excited about. Would you consider it the first step in bullion banking? And as a secondary question, how do you mitigate counterparty risk so that the silver investor feels comfortable, putting their silver in someone else's hands?
Okay. Well, first of all, a bit of a correction there. It is not my silver debit card. It's a friend of mine named Dale Olmstead, Olmstead. He's the one that started the silver debit card. And he can be reached by phone at 509-484-7753. I'll repeat that, Will. It's 509-484-7753. And it can also be emailed at pmb-v@hotmail.com. And I'll do that one again. It's, let's see if I can do this. Can't remember the acronym for P, but it's pmb-v@hotmail.com. So it's totally segregated. The silver is in a vault. It's audited every month, and that is segregated, not allocated. So if you brought in silver of, let's just make something up, 100-ounce bar, 110-ounce bar, 4 silver maples, and 5 silver eagles, and you wanted your silver back, you would get exactly that back. In fact, the exact ones that you deposited. So they're segregated unless you spend them. Now, if you spend them using the debit card, obviously, then something will be sold that will cover your debit. The thing that I probably haven't explained well is that Dale set this up in a very simple but I think elegant manner, and that is that there's 2 sides to the account if you choose to have 2 sides. There's a cash side and a metal side, and that's what I use personally. The cash side is like any debit card. You have a cash balance, and then you also can have a metal balance. It could be gold, silver, platinum, or palladium, any of them or a combination of any of those. Now, if the deposit of silver or gold or whatever it is less than the value, or the paper price, I should say, is less than the paper price you deposited at, then it makes little sense to sell it because you'd be creating a loss. So you could just debit the paper side, and that's how it's set up. That's how I personally do it. So there is that aspect to it. But let's just go one step further, or let me just continue one step further. If there is a banking failure, then the cash side could be in jeopardy, but the metal side would not be. It's, again, held, segregated, and audited every month in a private vault, and that is safe and sound. So I think it's sort of a shelter, if you will, from a potential banking problem. And I suggest people start small. I certainly would just look at this as a tool. I wouldn't look at it like, oh, I'm going to put all my silver in there. I don't think anyone's thinking that way, but I just want to make it clear. But if you think you're going to see price appreciation in silver and you're buying now at under the $25 level, and you think like I think that silver may be, at the $50 level in a couple of years, and then a couple of years after that up into the 100 somewhere, then certainly you could put a portion in there, and it's an easy way to liquidate. One of the biggest questions I still get, and I used to get very frequently, was, well, I like to buy it, but how do I sell it? And this takes care of that. You want to call it a problem. I wouldn't say it's a problem, but that issue. And the issue is you buy it, it's segregated, and you spend it. And going back to one of the many conferences I've been to, I was sitting on stage with James Turk, founder of Gold Money, many years ago, not that many, a couple of years ago, and some from the audience gave the same question to Jim. Well, what about, how do I get out of it? How do I sell it? Who do I sell it to? It just seems so hard. Of course, it's not. It's very simple. But he said, you'll spend it. You'll just spend it. He kind of winked at me, and I kind of chuckled because it really is not that difficult. But this is a way to do it that's transparent as you're doing. I mean, you could use a debit card anywhere, at a gas station, at a grocery store, at the dry cleaners, buying a dinner, whatever, and debit your silver out of your account, and no one's the wiser. Only you and Dale are basically aware of it, of course, the bank, that you have sold silver into the market to pay for that transaction.
Gotcha. Yeah, I think it's a great way to spend down your metals, like you said. We've been in the habit of paying babysitters or going to the local farmers market and spending silver, or trying to spend physical silver itself. Obviously, as a lot of the masses aren't aware of the valuation or aware of the monetary element to it, this is a great way to take advantage of that. Do you believe that the paper and physical markets will eventually split into two prices? Or do you think that would effectively be the end of fractional bullion banking, and that investors would completely lose faith in paper claims on metals altogether?
Yeah, that's a tough one. First of all, for history purposes, we have seen we've seen them split. I mean, during the financial crisis of 2008, for the retail side of the silver market, not the wholesale side, meaning bullion bars of 1,000-ounce quantity, there was a huge discrepancy between the paper price and the metal price. You had silver quoted at 9 and under, and yet if you went anywhere, you were paying about $13 for silver. So a huge discrepancy between the paper price on the COMEX and what you actually had to pay to buy it. So that's happened. Will it happen again? Yes, I think it will. Will it be the end? I don't know the answer to that question. These the powers that be, if you will, are pretty smart, really, and they are going to keep their system going at all costs. I don't see how it could. If there was a discrepancy that lasted for several weeks, then I think it'd be a moot point. I think everyone would just disengage from the paper side, and there might be private contracts or something like that, which already exists. There's a lot more in the over-the-counter market than in the regulated markets anyway. So, I take a stab at it that, yeah, it could be the end of it. But, we saw it once. It certainly didn't end then. It did last for quite some time, actually. But I wrote an article about it, about making an arbitrage on it. Got some negative blowback, saying I was wrong, and that's okay. I don't mind that. Turned out I was correct in that instance, that the paper price and physical price did match again. And so we'll have to see. But certainly it's something to watch for. And the way to do it the next time is, I think, what I did the last time. And when I saw this huge discrepancy of $13 silver on eBay or any coin dealer store you wanted to walk into, and $9 silver on the COMEX, I took possession of 3 mini contracts, 3 1,000-ounce bars. And, of course, anyone that knows the details knows that there's no such thing as a pure 1,000-ounce bar. They're around that amount, but roughly 3,000 ounces, and I had them minted into rounds. So I was making like a 30% markup on those had I sold immediately in the retail market, which I did not, but at least I think the idea is clear.
Interesting. That's very interesting. I like your point about a potential private, well, I guess not potential because it's already taking place, but a private market springing up to facilitate those larger transactions where, yeah, it might be paper claims, but in that regard, it could very well be on actual physical segregated metal. Kind of liken that to private storage versus your depository storage options. David, final question here, not to keep you too much. Personally, I came to the conclusion a few years ago that silver is so massively undervalued that for me, it didn't make sense, that there was no need to take the additional risk in owning miners or other stocks. What are your thoughts on that? What's your advice for the average and or smaller investor that's just getting maybe just getting started in the silver market?
Well, philosophically, I pretty much agree. I mean, I think I've been very consistent, at least I've tried to be, that I think that I've always stated that everyone should own the physical metal first before they moved up into higher risk reward profile. So in other words, you should have real metal, that you can touch, that you own, that there's no margin on, it's debt free. You go touch it, you own it, before you move into anything else. Now, I look at the mining shares as well, and for the small investor, I'd say no, don't bother, because you're adding risk, and why bother? As you said, silver is so undervalued. Stick with just the metal itself. For the average or above investor, I still believe and strongly that there is merit in having the shares. I mean, there's more money to be made on paper silver than in physical silver. I don't like to say that, but a fact is a fact, and that is an absolute fact. I mean, if you go back to the Morgan report at the inception and you look at what silver standard was at 65 cents Canadian, and that's when the Canada was not nearly as powerful as the U.S. dollar, believe it or not, in those days, and that stock went to 40. That was something like a 50-fold increase, and we had several that were similar back in the day. I certainly won't make those comments for the last couple of years, but I think we're getting ready for similar returns like that. So if you're looking for those type of returns and you're patient, in other words, you're willing to buy in now when the market's low and sell when it's high and it's panicking and everybody wants to buy silver and all you hear on the news is gold, 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 silver, 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 and I think that's not going to happen until 2016 or so. But if you're willing to do that, I think it is behooves the average investor. You can become an average investor to a much above average investor. But you want to be smart about it. I mean, I used to say that, you should, one, not start with the Morgan Report if it's the first newsletter you have ever subscribed to, because the financial terminology, we try to keep it very, easy read for everybody, but there are financial terms that, people might not be familiar with. And if you've never subscribed to a newsletter, you have nothing to compare it to. You might expect more out of it than anyone can yield. Nonetheless, I've been a newsletter junkie from the time I was in my early 20s, and I've read almost all of them. And I know the merits of most of them, and in my opinion, and I'm talking my own book here, so beware, but a lot of them are not really that valuable. We do a great deal of effort. So again, I'm free market, Will. Look, if you want to use the silver miners as a way to leverage yourself, I'm for it. If you decide that that's not for you, I'm for that. Personally, I like both. I've done well on both sides, and I've made errors on both sides. But all in all, I had if I was taken to court and had to, under oath, say, where did I make the most money, it would be I made more money in the miners than I've made in the physical market.
Fair enough, David. I personally really appreciate your insight, taking the time with us today. I very much appreciate everything you've done for the silver market. I can tell you that when I was getting wet behind the ears a few years ago, your work and whatnot was very instrumental in my education process. So we thank you very much for the time. Tell our listeners and friends out there where they can learn more about you and the Morgan Report.
Certainly the best thing to do is just go to our website, which is www.silver-investor.com, and you can sign up for the free email. If you're a YouTube aficionado, the YouTube channel is Silver Guru. If you are on Twitter, it's at SilverGuru22. So we have a Twitter feed, a YouTube feed, and a free weekly e-letter.
Superb. Well, thanks again, my friend, and look forward to the opportunity to getting together with you on down the road.
Very good. Thank you.
Thanks, David.
Okay.